Too many business owners hand out bonuses based on guilt, pressure, or last year's habits and profits, only to drain their cash and regret it later. But here's the truth: giving out bonuses when your business isn't profitable can actually hurt your company more than it helps your team. In this episode, I'll walk you through a clear, repeatable framework to decide if you should give a bonus, how much to give, and who should receive it. You'll leave with a system you can use year after year to reward your team without jeopardizing your business. You're listening to Business by the Books, the podcast that helps business owners understand their numbers and finally make confident and empowered decisions. Today, we'll cover how to check if your business is even profitable enough for bonuses, why cash reserves matter more than good intentions, how to calculate a fair bonus pool, the exact criteria to use when deciding who qualifies, how to allocate bonuses consistently and tie them to performance. Lastly, when to pay bonuses so your tax strategy works for you and not against you. This is the season of gift giving, evaluating team performance, and tax planning. Now, my goal of this episode is that you feel confident and empowered as a business owner to know how much to give in bonuses, who to give them, and a framework that you can use year over year. Because from an HR perspective, we are required to use consistency when looking at compensation for our team. So let's walk through the framework. And as we walk through, I'm going to share with you how I've applied this framework, how we apply this framework here at Kickstart Accounting, and how we've seen other clients apply this framework. So the first step is to pull your business profitability. Now, if you're a Kickstart Accounting Inc. client, you are ahead of the game because all you have to do is pull up last month's snapshot. You're going to look at your profit and loss statement. And I want you to look at two numbers. So you're going to look at your net income or profit for this year. So this is the year-to-date net income number. I also want you to pull your 12-month rolling profit and loss statement so that you can look at your net income for the last 12 months. Now, what this does is it evens out any seasonality. We have a lot of clients who have amazing quarter 4 seasons. And if you are missing those dollars, you're not going to be able to effectively plan for last year. So again, we're going to pull our profit and loss statement. We have two numbers that we're going to be looking at. We want your net income year to date, and then your net income for the last 12 months or rolling 12 months. Now, I have a rule here. We are only going to distribute bonuses if the business is profitable. And what I hear from a lot of our clients and business owners is that, it's not my team's fault that the business didn't create a profit. I really want to give back to my team anyway. Or another one is, I gave my team a bonus last year. And because I did it last year, I feel like I have to do it again this year. And I'm here to tell you that more importantly, what your team wants is a business that's going to be here for the long haul. We have to, as business owners, as CEOs, our priority has to be to create healthy, sustainable, profitable businesses. And so it's important that you only distribute bonuses if you are operating at a profit. If our business has a profit, we can go on to step 2. Step 2 is to check your cash reserves. Now, ideally, hopefully, you've been setting aside funds for bonuses throughout the year. If you have not, then this is something that you can implement next year so that you're saving for bonuses throughout the year. Here at Kickstart Accounting, we save for bonuses as part of our weekly cash planning. I want to encourage you to have 3 savings accounts as part of your business operations. The first account is your checking account. This is where the money comes in, money comes out, also known as an operating account. The second account is for your tax savings. This is where you're saving for your taxes throughout the year. You might be more profitable this year, and I don't want you to be caught off guard in April when you have a bigger tax bill because you are doing better in business. All right. And then the third one is your rainy day fund. And here we're going to have 1 to 3 months worth of operating expenses. This account is your savings account. And this is also where you can save for things like team bonuses. So if you have not been saving throughout the year, I want you to check your cash balances. And do you have enough for your tax reserves? Do you have enough to pay your tax bill? And I don't want you to confuse the two. If you don't have enough to pay your cash bill, then maybe this isn't the year for bonuses. April's going to come regardless, and we need to have enough to cover 25% of our net income. Have you been saving in your third account? Do you have dollars in that rainy day account? And maybe you have over 1 month's worth of operating expenses, so you can allocate some dollars to actually pay out this team bonus. Again, team bonuses, you guys, they cannot hurt our business operations. One year I had a client who she didn't become a client until January of that year. But her CPA had said to her in quarter 4, "Hey, you have a major profit. You need to go spend some money." And so she went out and she bonused herself and her team. And what her CPA did not ask her or have as part of the conversation is what her goals were for the following year. And she had big goals for the next year. And she really ended up in a situation that hurt her because not only did she spend a lot of cash in actually paying out her team, her bonus, and the taxes, she also had a net profit. And so she had to pay her tax bill in April. She was not able to invest in the growth of her business in the way that she wanted to in quarter 1 because of the isolated decisions she made in quarter 4. So yes, I want you to give back to your team. I want to be clear. I want you to be able to give back to your team, but I want you to be realistic about what you have in your cash balances because you will have to pay your tax bill in quarter 1. If you have any other growth initiatives for next year, I want you to be able to have the cash so that you are ready for those growth initiatives. Now, step 3, we need to set the bonus pool. I like to use 10% as a rule of thumb. You can allocate up to 10% of your net income for bonuses. So if your net income, I want to be clear, net income is sales minus cost of goods sold minus all of your operating expenses. It's the number all the way at the bottom of your income statement. If your net income, when you look at your rolling 12 months profit and loss, if that's $100,000, then your bonus pool would be $10,000. Now, you need to adjust this number up or down based on your company's goals for next year, based on your cash balances, based on your team, based on what you have in the business. Our bookkeeping team, we love to calculate this information for our clients. And so we can give you all of the data behind this decision. I want to tell you what we can't do for you. We cannot make this decision for you. It is based on your risk tolerance, how much cash you want to see come out of your business. Our team here at Kickstart Accounting Inc., we are not authorized to say, here is how much you can give in bonuses, and here's how much from a cash perspective you should release from your business. We will not give you that information. However, what we will give you is your net income. We will give you this 10% dollar amount. We will show you what your cash numbers are, but it's your job as the CEO to make those really difficult decisions. You cannot outsource difficult, big decisions like how much to give to your team in bonuses this year. All right, step 4, we need to define eligibility for bonuses. Here, we're going to list all the employees and we're going to gather the information that we want to base our bonuses on. And this is where it's really important that we're consistent from an HR perspective. Now, here at Kickstart Accounting Inc., we run our company on EOS. And so we evaluate all of our employees on get it, want it, capacity to do it, and then our core values as a firm. And so I want to give that to you as a possibility of what you might evaluate your team members on. It's important to know that you cannot evaluate your team members based on my core values. You need to have your own core values. So for instance, if loyalty is really important to you, then tenure is going to be something that you bonus extra on. If loyalty isn't important to you, then that's not something that you want to have as part of your core values and not something that you want to include in your bonus calculation. Lastly, as we go through and define the eligibility for employees, it's important that when we're assessing performance, that we're doing so for the full year. As business owners, we can be hyper fixated on what just happened, right? What just happened in our business in the last quarter. And as we're looking at our employees and their performance, let's look at the full year, just like we're doing the rolling 12 for our financial performance. Let's look at our team's performance for the full year. And here we're going to look at their performance as exceptional, meets expectations, or below expectations. Somebody who is exceptional means that they consistently go above and beyond. This is in your core values and the way that you want your brand delivered to your clients. So exceptional means that these team members go above and beyond. Meets expectations means that these team members, they're solid, they're reliable, they come to work, and they do well. Below expectations, this is somebody who might be on an action plan, they're on a performance improvement plan, and they should typically be excluded from the bonus pool. So we'll use these assessments to determine who is going to be eligible for that bonus. Step 5, we're going to allocate the actual bonus dollars. Here, we're going to distribute the bonus pool amount. So in my example, the $10,000, we're going to distribute the $10,000 based on the performance of that team member and your core values. Again, this is your decision to make as a business owner, and I want you to apply consistency. So this is something that employees can see, feel, and they know how to achieve year over year. Lastly, our step 6 is to decide on timing based on your tax strategy. Again, I want to encourage consistency here. So if you paid your bonuses in December last year, then I really want you to pay your bonuses in December again this year. The IRS wants to see consistency applied in accounting. Now remember, if you pay bonuses before December 31st, that expense is going to count this year. If you pay the bonuses after January 1st, those expenses are going to be applied to next year. If you are accrual basis accounting, then you can talk to your tax accountant and your bookkeeping team to decide when you want to accrue those bonuses and when you want to pay them. Most of our listeners here and most of our clients at Kickstart Accounting are cash basis filers. From an accounting perspective, we consider it an expense when the cash leaves the business account. So if you're paying before December 31st, it will count for this tax year. If you're paying after January 1st, that expense is going to apply to next tax year. And that's going to affect your net income and how much you pay in taxes. Remember, as a small business owner, you pay your tax based on the net income of your business. Your bonuses, they are an expense and a deduction of your business. So it will reduce the amount of net income that your business pays taxes on. Most importantly here, be consistent. We don't have to, as CEOs, play with timing. Year over year, we are going to pay taxes. I don't know about you, but I'm hitting it for the long run. So for me, I want a healthy, sustainable, profitable business. And I don't need to spend time and energy trying to move dollars between tax years to avoid a tax bill. I know I'm going to pay taxes on that tax bill, whether it be this year or next year. So confirm with your accountant on how timing affects your tax situation and where it's going to be the most tax advantageous for you to take that bonus expense. As you go through this process this year, I want you to document how you handled bonuses. You can download our worksheet at kickstartaccountinginc.com/bonus. It is important that this process is fair. It is tied to the business health, and it is aligned with your values as a business. When you create a framework, it builds transparency and trust across your team. So document this framework and apply it consistently year over year. If you need help understanding this information or applying it to your business financials, book a call with your money team. If you are a client listening, you receive financial review calls as part of your package. If you are in the Premier or Standard plan, you get a monthly financial review call. Book it. We are here to help you. If you're a basic client, you receive a call once a quarter. We are here to help you understand this information. We will make the decision for you, but we will help you understand the information so you know how to apply it. If you don't have time for a call, send us an email so that we can help you. If you don't have a money team, we would be honored to be part of your money team. You can go to kickstartaccountinginc.com and book a discovery call today. I hope you enjoyed today's episode of Business by the Books. Don't forget to hit like and subscribe. This is the #1 way we can help other entrepreneurs find this podcast, because here at Kickstart Accounting Inc., it is our mission to help entrepreneurs understand their numbers, get access to this information, and grow and thrive in their business. So please help me help other entrepreneurs understand their numbers so they can finally grow and thrive.